Hi there, welcome to another Kneppy Invest, where we look at the happenings on the ASX over the past week. And to be fair with you, it was a fairly disappointing week in terms of performance of the overall market. XJO was down 3 of the 5 days. In fact, in the past week, XJO looks like it's down around about almost 3%, so 2.6%. This is not till the end of trading on Friday, the 18th of August, because I'm recording this video at 4:15 p.m. But Trading View is 20 minutes delayed. So according to Trading View, the XGO is 7149.7. So we're going to have a look. XGO 71497. 71. So it's down a little bit. So closing auction has now been completed. So we can safely say now, and not safely say, we can definitively say now that the XGO is down about 2.6% for the week. Now, it's really interesting because I have heard quite a few people say we're in a bull market. We're not in a bull market. We're not in a bull market in Australia at all. In fact, when you do look at the daily chart, even the weekly chart, it's been going sideways since middle of 2021. That's 2 years ago. It's been going sideways. We are not in a bull market. I keep seeing people on Twitter saying that this is usual thing to happen in a bull market. We are not in a bull market. Look at the daily chart. Lots of volatility here. And just look at these two moving average ribbons I have here, which is a longer term and a shorter term. And when you see these two very close together and crisscrossing each other like they have done, that also tells us that we're just going sideways. We're neither in a bull market nor a bear market. The market's undecided right now when it comes to Australia, particularly the top 200 companies on the ASX. Now, maybe you could argue a little bit of a different story on the American markets. However, the NASDAQ has been a little bit weak over the past, we'll say, a month. So ever since the highs we saw back in, when was that? Unfortunately, my face is right over it. The highs we saw back 19th of July. Yeah, so the highs were 1 month ago. So nice little pullback in the NASDAQ. But if you do look at the weekly chart for the NASDAQ, that is a sort of just a little bit of a dip. And dips are very common. If we go back to the last bull market, we saw dips happen quite often, in fact. So this could be just a dip, nothing to be too concerned when it comes to the NASDAQ. But this is definitely more like a bull market than Australia. But I would get probably nervous if the NASDAQ did fall below this little support line here, which is around about 13,600, and the NASDAQ is well off that. So still 1,100 to go. The Dow Jones, I haven't actually had a look at the Dow Jones recently. So let's have a look at that. So it's been trading nicer, but it's right on a support level right now. Down big overnight. What was it down overnight? 0.8%. Anyway, so that's really, I'm going to talk about the markets right now. The American market's looking a little bit more bullish than Australia, which is understandable because the best companies in the world are listed in the American exchanges. Now, you could argue with me about that Alphabet, Google, well, that's the same thing, isn't it? Alphabet, Microsoft, Apple, I'm probably forgetting one, Amazon, are not the best companies in the world, and I think would have a bit of an argument there. Anyway, onto Bitcoin. I don't usually follow Bitcoin all that closely, but they had a massive down day yesterday. It's down 7.2%. So it's nothing too concerned for those crypto bulls, Bitcoin bulls. But you definitely want to see Bitcoin get above. I probably want to see it get about 32,000, so still about 5,500 off that. So I don't really follow cryptocurrencies all that closely, but there must have been a reason why Bitcoin was down 7.2% yesterday. But to be honest with you, I don't have any curiosity in finding out why. Unlike gold, which I do have a little bit of curiosity in, but gold is not looking awfully bullish right now. In fact, it's looking a little bit more bearish. It has fallen through a little bit of a resist or support level, which was the lows we saw back in June. But that low was not that significant. When you look the last time it was that low, it was way back in March. When I say way back, I'm talking about 3-month period there. So what we need to see with gold, just like Bitcoin, just like anything, we need to see it get above a resistance level. And that resistance level for gold is $2,060. The reason that's a resistance level and a fairly strong resistance level is if we just look at the weekly chart, we can see it really struggling to get above that level ever since August 2020. So we're talking about 3 years ago, struggling to get above that. Gold is trading in a range now. At the bottom of that range is just above 1600. If it falls below 1600, that would be a bearish. If it gets above 2060, that would be bullish. That's the whole point of trading, is you're looking out for breakouts, either to the upside or downside, because we're all uncertain which way things are going to move. Almost completely uncertain, because we're talking about the future, and the future is almost unknowable. So you're looking for signs, and you're looking for the best way to put it is you want to decrease your risk. That's why you should use technical analysis to decrease your risk, unless you're a really long-term holder. But even then, you're still speculating. So I won't say who it is. There is someone I do follow, and they keep saying they're an investor, they're not a speculator. But they don't look at the past at all. They don't look at financial statements. This person is fairly famous. They don't look at financial statements, but the reason they take investments in companies is because of the future. They like a particular theme of that company, the sector that company's in, something like that. And I did mention at one point that to someone that this person actually is speculating, because they're only talking or thinking about the future. They're not looking in the past and drawing any conclusions from the past. Now, you might say that's dangerous, because the past has been already written and the future has yet to be written. And but in the end, I say this all the time, the past doesn't repeats, but it often does rhyme. And you can take a lot from the past. Particularly high quality companies are more likely to say high quality companies in the future, not always. And low quality companies do take time to be high quality companies. So if you're just buying in a company because of a particular theme, this theme was China, by the way, and China has been all over the place the last few years, doesn't necessarily mean a company will actually benefit from that theme. Just look at oil. Go back to any sort of gold rush. Those who benefit from gold rushes weren't those who went out to try and find gold. It was those who were selling picks and shovels to the gold diggers. Levi jeans were invented around there because they sold Levi's, or whatever his name was, sold Levi's to the gold rush people. So just because there is a theme doesn't necessarily mean every single company will profit from that. Potentially only a few companies will, and the majority of companies will fail. Just look at the car industry. This is a perfect example. If you go back to 1910s, maybe even 1920s, there was a plethora of companies wanting to manufacture cars, and the vast majority, I'd say 95% of them failed. Even if you go back a little bit further, there was a bicycle craze. Was it the late 1800s or something like that? And a lot of companies were created to take advantage of that craze, and 99.9% of them went bankrupt. I'm not sure if I'm exaggerating that. Anyway, rant over. So I think the whole point of that rant was, just because you call yourself an investor and you're doing stuff that is more in the speculating range, speculating about the future, don't call yourself an investor and then poo-poo those who look at charts and think that's actually speculating. It's actually less speculating when you look at charts, because you're looking for signs to decrease your risk. That's the way I look at it. I want to decrease my risk when I take a position when I'm trading. And it's actually working quite well so far. So gold. Weekly chart, so sort of in the middle of the range. I'm neither bearish nor bullish on gold at this point in time. I don't care about the future. More than likely, I'm going to be wrong. I've heard people say bullish things about gold for years and years, bearish things about gold for years and years, and at least some of them are going to be wrong. But I think over time, we're talking about a long period of time, gold eventually will go up. That's undoubtedly true, unless the world's ending. Iron ore. So iron ore, this is another one. Fairly volatile. If you look at the weekly chart, in fact, if you look at the monthly chart for iron ore, if it goes back this far, yeah, it goes to 2016. So there was 2016 was the bottom of the iron ore market, when iron ore got down to $40, when you could have bought BHP, Fortescue, Rio Tinto for pittance. I think BHP got down to $14. Let's have a look. We can actually have a look. You could have bought BHP for, or even lower than that. $12.50. Share price of BHP right now is $43. That's the time to really get excited about these sort of companies when the commodity price is really, really low, like iron ore was back in 2016. Now, when the iron ore price gets up to $220, that's not the time to think about buying into Fortescue and alike. Anyway, back onto iron ore. Again, I've heard people say, well, because of China, iron ore prices should plummet down to $80. Well, who knows? When they usually say that, the exact opposite thing happens. Anyway, so I'm going to call myself skeptical. I almost never believe anything I read, unlike a lot of people out there. Anyway, oil. Which way oil is going? Oil is going to go. So, whole point of looking at charts is to see what the market is also thinking. So, with iron ore and gold, at this point in time, I'd say particularly gold is looking a little bit more bearish. So the market overall is a little bit more wary about gold. Iron ore really got nothing to say about iron ore. I had a good day yesterday, up 2.6%, but yeah, it's nothing too exciting. But US oil, probably should say US oil does look like the signs are there. Now, what we need to see is oil get above about $85 a barrel, because we have seen it dip. Now, it's come into the support area and now has rallied the last 2 days. So at this point in time, we want to see it keep on rallying. Now, I have no oil companies in my portfolio at all. So maybe now is the time to think about buying some oil companies because this little rally. And so oil companies maybe, I don't know, some people like Karoon, some people like Santos, Woodside. I thought Woodside was more gas. Or maybe it's Santos. Anyway, so I think oil is probably looking the most interesting out of all the commodities I've looked at just today, and that's only gold and iron ore. Now on to some really interesting charts, something I just looked at and just had to include in this video, and that is bonds. I'm surprised what's happening in bonds. So I'm going to look at the US 10-year, Australia 10-year, and the next two slides. I also looked at the 30-year for the American government bonds, and I just was pretty shocked that right now the US 10-year is right at a long-term high. So that long-term high was reached in October 2022 when it got to 4.3%, and then it pulled back. And it's been a beautiful uptrend over the past, say, 3 or 4 months, since about May. And it's now hit that previous high back in October last year. And now if it goes through that, that would be a fairly bullish sign. But I'm not sure why government bonds are rallying like this. And when I say rallying, not significant rally, but I thought maybe with the expectations that interest rates are going to stop rising, maybe with potential of recessions looming large, that the government bond yields would actually be falling by now, but they're not. And there are some people who say you should always listen to the bond market because the bond market's always right. And I don't agree with it because no one is always right. Unless you have a time machine, and then you can look at the future that way. But that's sort of cheating. Like, what's his name in Back in the Future? Got that sports almanac? That would be cheating. He is pretty smart. He's really smart. Anyway, and then Biff actually did get the sports almanac and change the world. Anyway, so look, if you look at the 10-year bond yield, let's go back, look at the weekly bond yield. So I want to see what the last time was this high. So last time it was this high was way back in 2007. 2007. Now, I don't know if you've followed me for a while, but I've mentioned and done a few videos on government bonds, how the bond yield, or the bond market has been or was in a 40-year bull market. So you say a 40-year bull market looking at this, but don't forget, bond yields and bond prices are inversely related. So if bond yields have been going down since 1980s, that means bond prices have been going up. That's why I'm potentially interested in bonds right now, simply because I do think more than likely they might be going down from here, which means bond prices should be going up. So potentially that could be a really good potential investment in the future. There are some ETFs where you can take advantage of that. I forget the code, bond ETF. Here's one. Yeah, it's TLT, that's right. So look at that. Oh, yes, you can see how the bonds have rallied since. Remember, it was about actually that's the daily chart. Well, actually, no. You can just see how inverse. You can just this is perfect. This is a treasury bond ETF. So this should follow the prices. So from when this started, 2003, all the way through to 2020, look at the rise in this ETF. Beautiful. It's gone from about $84 up to $772. But since late 2020, it has fallen from a high of $180 down to 93. So it's almost halved. So what's happened in that time? Well, bond yields have gone up. So right now, this particular ETF is almost $92 is the low we saw not that long ago, but we're talking about almost a 10-year low if it gets below that. So put this onto your watch list, TLT, which is a 20-plus year Treasury bond ETF on the NASDAQ. I'm not sure if there's any ETFs, bond ETFs on the bond ETF on the ASX. I would doubt it. I should actually Google that. I'll do that after this video. Anyway, so back to the bonds, 10-year bonds. I was actually really surprised. Was actually really surprised when I actually did see this chart that it is right on that resistance level. And the same thing is true for the Australian bond market. Look at this. This is actually even more powerful resistance level. So if you zoom, actually look at the weekly chart for this. Not sure why that's there. Anyway, so look at the Australian 10-year bond yield. So back in June 2022, it got up to around about 4.25%. What is that exactly? 4.3%. So it got up to 4.3% in June last year, got up to 4.3% in October last year, got up to 4.3% in July, and now it's right on 4.3. In fact, it's 4.24%. So it has come back off that resistance level. So the very fact that this particular bond has hit that level 3 times in the past means there is some strength to it, unlike the American, which has only hit it once. So there is a bit of strength. And I'll be more confident if this was like a stock or shares or something like that, or a commodity. And if it gets above 4.3% on strength, that would be a bullish sign. But again, I'm fairly bearish about bond yields. I think there is some troubling signs now. We have started to see unemployment starting to rise. And typically, when you see unemployment rising, that is a sign of a recession. We don't want to see unemployment significantly rise from here. In fact, I believe in America, if they do see some significant rises in unemployment, the committee will, forget what that committee is called, but they will possibly declare a recession over there. So I am yammering on about, haven't even looked at a company yet. First 2 companies I'm going to show you are companies that I've already done a standalone video on, but I thought I should have a look at how these companies have rallied off the news that they did release on Thursday, August the 17th. The first one is Core Lithium. Who is a Core Lithium shareholder out there? What do you think about this company and the company, particularly the company's management? Do you actually hate this company at this point in time? So I'm going to look at that hourly chart just because the share price has been pummeled. I'm going to decrease my video here. Now, there was some nice buying coming in the first hour. Core Lithium share price rallied 7.3%. I would not get excited about rallies like that because it fizzled straight away. And during the rest of the trading today, Core Lithium price fell. In fact, it got to a high of 46 cents. Now it's down to 41.5 cents. This is a really bearish looking chart. For those who don't know, Core Lithium, or didn't watch that other video, why not, is the first question. But this company did a capital raising, a highly or heavily discounted capital raising, raising, I think it was 300 million more shares, raising, what was that, $100 million odd dollars? I'm not even sure why they need the money, because I did have a look at their quarterly report and they did produce a fair bit of cash flow. So maybe they are a bit wary about their project, their lithium producing project, and I don't think it's going to produce enough cash for what they want to do. I thought capital raisings for this company was over and done with, unless they made a significant acquisition or something like that. The other company I did a standalone video, I released that on the morning of 18th, is NextEd. I thought there was potential the market has overreacted to this company. Now, NextEd used to be called iCollege, down 8.8% today. This wasn't, they released a trading update for those again who haven't watched that video. Released a trading update, but this trading update wasn't in regards to a profit upgrade or profit downgrade. It was in regards to this visa thingy, COVID-19, a temporary COVID-19 408 visa, and the industry, the next set is in education industry, I suppose, thought that this visa would end in July 2023, and the government said, no, we're going to continue having it. And potentially this will negatively impact on Next Ed. They were not clear about that. They actually said they're unsure, but the market seems to be sure that this will have a negative impact on Next Ed. Nice little rally last night, end of trading, but that rally has totally fizzled out today. If it bounces off 75 cents, that would be pretty good. So I'll put this onto my watch list. If we see a nice little bounce of 75 cents, also volume has really decreased during the day, so low volume. So more than likely those who wanted to sell out have sold out. Now I'm becoming more skeptical about bounces now. So I have tried to trade a few bounces, and my bounce with ResMed looks like it's failed. So anyway, it's a whole different story, whole different video. Now to some other companies. First one is, actually, there are two companies I do own. Yeah, I'm looking at two companies I do own and three companies I don't own. So only 1, 2, 3, 4, 5, 6, 7. I thought I was going to talk about more than that. Oh, I did not include one company here. And that company is OXT, Orexplore Technologies. And if you just saw that pop up, you'll see why I wanted to talk about Orexplore Technologies today. Anyway, on to Chrysos Corporation, a company I do own. This company had a really nice rally in share price from between the 10th of August and 15th of August. Share price up 7.5%, 3.6%, 1.5%, 6.3%. No significant news. And then they went into a trading hold. So I'll talk about the trading hold in a second. This is very important. So there's no news that really sort of, justified this little rally in the share price. You can see in the 1 hourly chart, share price just rallied really strongly. So really high volume coming in on the morning of Tuesday, 15th of August, the day shares of this company went into a trading hold, or maybe it was a day before. Company shares went into trading hold. Why did they go into trading hold? Was there loose lips? Was there some significant announcement coming from this company? No. Trading hold was simply the ASX asking Chrysos. I'm a shareholder. I don't even know how to pronounce the name. I should look at that. So this is just an ASX price and volume query. So the ASX saw the share price increasing. They saw the significant volume in the morning of Tuesday and went, hey, Chrysos management, what's happening? Why is the market really excited about your company right now? Typically, when a company gets this sort of request from the ASX, they answer it fairly quickly. But the shares of Chrysos have gone into suspension because they need more time to answer this question. So it makes me think, because usually when you get one of these queries, the company is asked, is there any relevant news that you have not released to the market that could explain this rise in share price? Typically, not always, but typically, I'm going to say 98.6% of the time, the company will say, no, we have not released any information that could explain the rise in share price. And then the next question they will ask, if they answer no to that, is there any other reason why the share price is rallying or dropping? And most of these ASX price and volume queries are because the share price has dropped a lot. And typically a company will say then possible reasons why the share price is trading higher or lower on significant volume. So I'm really interested to see why Chrysos Corporation is taking a lot of time to answer this price and volume query. Maybe they don't have enough staff, or maybe there is something significant happening with this company. I'm very excited about the future of this company, but then again, so is the market. The market cap of this company is like 400, 500 million, or 318. A little bit too high there. Right, so the other company that I do own, and this is just a trading stock for me right now, is Codan. All down 6.1% today, which is understandable because the company did release a trading update on the 15th. And the trading update sort of looked negative. So they said that revenue down 10%, underlying profit down 35%, underlying net profit after tax in the second half of financial year 23 up 13%. So that's in the second half versus the first half. So maybe the market got a little bit excited about that. Share price did rally on the day, but has fallen back today. So a lot of volatility in this company share price. And if we look at the daily, actually this is 1 hourly chart, you ought to see a nice little rally in the share price, and the share price has pulled back. And so actually it's pulled back, it's gone down 1 to 7 straight hours, but decreasing volume, which is actually a good sign. Well, you may laugh at that, but it is a good sign that there's less and less people wanting to sell out. So even though it was 2 good days, for some reason, the market decided to sell off today on lower volume, which is not necessarily a bad thing. And maybe the reason why the market's sort of like this announcement, even though the full year numbers are down, the very fact that the second half numbers are better than the first half numbers are up. I am sort of bullish about the long-term future because this company is diversified. They have a communications business now, or division, and I think that division has the potential to grow a significant amount. One of the other divisions is metal detection. That can be really volatile in terms of producing revenue because it's going to be correlated to gold prices, and they sell a lot of those metal detection equipment, or whatever they call it, into Africa. And, well, Africa can in itself be quite volatile. So Codan trading update, it is something I look for all the time, is trading updates from companies. I just want to know how companies are performing. And the main reason I do look for these trading updates, they are the most powerful type of announcement a company can release, particularly if it's a profit or profit upgrade or profit downgrade. Now onto a company. I was going to do a standalone video today. So instead of doing a standalone video on this company, I've decided to do a weekly wrap up. And that company is Shine Adjusters. The reason, and it'll become clear why I was going to do a standalone video on this company, was simply because of the share price action today. And when I saw the share price movement early on the day, I thought this will be a prime candidate to do a standalone video. So I won't mention what that was or where the share price was earlier, but this was sort of innocuous looking announcement which caused an initial panic in the share price of this company. When I say panic, you'll be able to see this in a second. This was just a change of financial year 23 financial results announcement date. So in itself, the title is just pretty boring, but I did open it up. I don't know why, because that's sort of a title wouldn't interest me. They're just changing the date. But this is in regards to, so this is lawyers. I don't like these sort of companies. Now, they brought a class action against Johnson & Johnson Medical Limited. The class action was settled for $300 million, and Shine will get some of that money. But apparently, they put up all the costs to fund this class action, and they actually had to pay something like $32.4 million of interest to fund this class action. And they put in some sort of case to claim that $32.4 million back, and the court says no. And that's why the share price of this company has actually nosedived recently. And they said here, so this is the whole reason why they've delayed releasing their results to Tuesday, 29th of August instead of the 23rd of August. And the whole reason this might have, depending on the court case, could have a significant financial impact on the company. So I don't know. Anyway, really weird. 3rd of August. Anyway, they mentioned here, given the proximity of the 3rd of August 2023 court judgment to the originally intended results release date, but the 3rd of August is like 2 weeks ago. Anyway, I should have, that was the original announcement. Anyway, so this whole share price reaction to Shine Justice is just based off this interest they want to get back, which was $32.4 million. I'm not sure how they could win that. But when you look at the chart, it's just the market sometimes overreacts, and possibly they're overreacting here. Look, the share price just decreased from about 80 cents all the way down to less than 60 cents. And then today, massive volume coming in. But this is a really bullish one-day candlestick, one of the most bullish one-day candlesticks you can get. And the reason it's bullish, if we zoom in, you can see the shape of this sort of like there's a body, main body, and then there's a long tail. So if you don't know how to read candlesticks, these one-day candlesticks, so you have the open, close, the high, and the low. So the bottom of this particular candlestick, which is this long tail, you can see a long tail. The bottom of that tail is the low of the day. Now the green body means the bottom of the green body is where the share price opened. The top of the green body is where the share price closed. If it's a red body, you flip that. So with a red body, you have the open above the close. And if there was any sort of tail to the top, that would suggest that the high of the day was above the close of the day. No tail hit. So in fact, the share price of Shine Justice closed at the high of the day, very near the high of the day. So share price of this company opened at 55 cents, went to a low of 47 cents. The high was 57.5 cents, and the close was at 57.5 cents. A very bullish candlestick. The reason why this is bullish is simply because there was a lot of buying. The share price got down to say 50 cents, or even around between 52.5 cents and the low of 47.5 cents. We can see the buying when we just look at the 5-minute chart. And this is the 5-minute chart. Share price opened, and a lot of selling came in within the first 30 minutes. Share price went from the close, the previous day close was like 58, 59 cents. Share price went all the way down to 47 cents. Now, not as much volume as I thought there was going to be. In fact, the most volume was in the first 5 minutes. Share price did nothing. And then for some reason, someone, I think, dumped on market at 10.25, sent the share price down from 50 cents to 47 cents. It was probably one dump. In fact, we can have a look to see. So just remember that time. It was around about 10.25. So let's have a look at the summary. Course of sales. 10.25. So share price did open. So share price opened at 55 cents and started to sell down. Not a lot of volume at all. And I'm looking for that 10.25. Here it is, 10.22. Still 50 cents. Yeah, it was one trade at 10.29 that sent the share price down from 49.5 cents to 47 cents. And that trade was only for 1,000 shares, value of $507.60. As soon as that trade was made, then we started to see the share price rally and rally and rally. Not massive volume, it should be said, but it was enough volume. You can see these green bars here, the volume bars. There was enough volume for the share price to get back up to 57.5 cents, which was the high of the day. So those who were selling between about 10 and 10, we'll say 11, particularly those who sold near the low, they're probably kicking themselves right now. Why did I panic? Why did I panic sell? Why? Anyway, so this actually chart looks really interesting simply because potentially overreaction from the market, and the market has seen some value. Now, if we look at the weekly chart of Shine Justice, it's really interesting. If we go all the way back to January 2016 and also June 2017. So remember the low today was it 47 cents or something like that? The low in January 2016 was 47 cents. The low we saw in June 2017 was 45 cents. Well, one day it was 45 cents, then it went back up to 47 cents. So there are some people who believe technical analysis doesn't work. There is a reason why the share price bounced off 47 cents today. It was because people saw that this was the all-time low for the company. And they went, whoa, it's an all-time low for the company. Sentiment is probably financial performance of this company is probably better than back then. So that's why there was a lot of buying in Shine Justice today, just because that was the all-time low and pretty big volume coming through today as well. So good signs moving forward for Shine Justice. The bottom has been reached. Would I take a position in this company? Probably not. Although possibly there is value here. Although in saying that, the share price right now is just that's the weekly chart. So the share price is just below a resistance level, about 5 cents below a resistance level. So I've no interest at this point in Shine Justice. Plus, I don't like what they do. I'm not a big fan of lawyers, accountants listing on the exchange. I believe they should be private companies. There's reasons behind that, which I won't get into in this video. I was thinking there's going to be a short video, but I ramble sometimes. Anyway, a company I've been following for a very long time, Resonance Health. company that is borderline profitable, meager revenue growth. When I say meager revenue growth, I'm talking about really meager revenue growth. If you look at the financial history of this company, it's called Resonance Health, ticker code RHT. If you look at revenue, revenue. So it's gone up. So it's got the right trajectory from 2013, but it's gone from about $2 million to about $4 million in 10 years. So it's doubled its revenue. So you could say it's doubled its revenue, but over the last 4 years, very slowly upwards. It's been very close to being profitable on a continuing basis, but it's just not there at the moment. And I thought this company just needed something, just needed a way to they can consistently increase their revenue at a pretty good rate. And then they released an announcement today, residents contracted by major global pharma. And when I say pharma, I'm not talking about farmer who is out in the countryside with cows and that. I'm talking pharmaceutical. So you're thinking about the wrong type of farmer when I say that. Anyway, so residents contracted by major global pharmaceutical company for clinical drug trial worth $6.33 million over 18 months. So remember, they were making just below $4 million in revenue in the last year. So this is the amount of revenue they're making on an annual basis in just one contract. So if they can get more contracts like this company would be looking very interesting, particularly if they can maintain the margin, not maintain the margins, but if they don't spend a significant amount of money to help with this particular contract. Now, I haven't gone into too much detail about this contract, who it's with Glue. Do they even mention who it's with? I can't see any names. So there could be a reason for this. But anyway, share price only up 10.8%. I'm wondering, the share price at one point was up way more than that. In fact, the share price was up probably about 30 to 40% at one point today. So there was a little bit of selling, which is always, I'm always wary when there is selling during the day. So if we look at the daily chart for this company has been hyped up a little bit in the past. You can see the share price a few years ago got as high as 30 cents. I'm not sure why there was so much hype in this company. Share price of this company broke out in 2018. Before that, share price was going sideways. I was a shareholder back here, and I sold out, doubled my money. So I bought this company. Here's a little bit of a history. So I bought this company when I was like it was 2 cents. I thought it was about 2 cents. I see this little spike in October 2018. I saw this spike and I just sold because share price going sideways. I said, as soon as I see a spike in the share price, I'll sell. So I sold on the first spike at 4 cents, doubled my money, and then look what the share price did after that. Yes. That's what happens when you're too impatient. So if I bought this company, say a few days before that first spike, I may have kept on holding. And instead of selling at 4 cents, I could have sold at 16 cents. So I could have sold this. This could have been a 10 bagger for me. I've had 2 10 baggers in my life. This could have been another 10 bagger. But the share price has pulled all the way back to 7.2 cents. In fact, just a few months ago, 2 months ago, share price was 3.7 cents. Almost all the way back down to, below 4 cents, which I sold out. But then they released this announcement, some selling today. If we look at the 1 hour chart, more than likely the high was reached in the first hour. High was in the first hour. We can see that by a 5-minute chart. Probably in the first 10 minutes, the high was reached. No, in the first, 5 minutes of trading. So when a company goes into a trading halt, so they went to a trading halt at 9:19 a.m. They came out of the trading halt at 10:15 a.m. They don't automatically start trading again. There's a 20-minute, maybe it's 10. There's about a 20-minute period after the company releases an announcement before they go trading again. So the peak in this company's share price was in that first 5 minutes of trading after 10:35 a.m. And again, we can look at the course of sales here. You'll be able to see the first sale was at 10:36. There is a 10-minute period. And the share price opened up at 8 cents. And at 10:37 and 37. So 1 minute after the share price or the shares of this company started trading, that's when the share price did reach its high. Actually, it was 88 cents, 8.8 cents. So that was at 10:38 and 27. So a minute and a half after they started trading, share price reached its high at 8.8 cents. And now share price pulled back significantly. And those day traders, more than likely it was day traders, looking very silly right now. So interesting announcement from this company, particularly with just the revenue compared to the amount of revenue this company makes. So if this, I don't know, I might be interested in taking a sneaky position. I don't know. I'm thinking of maybe changing some of my rules and not trade these sort of companies. And the main reason why there was selling, I think a lot of stale shareholders who bought at high prices in the past, between about 32 cents and say, 8 cents, saw the opportunity to sell out of this dog stock today. And that's why there was a little bit of selling when the share price got up to 8.8 cents. A lot of shareholders have bought in high prices in the past. Anyway, so Resonance Health. Next company is Sezzle. So Sezzle, the only interesting thing this company released, I didn't even know the share price was that high. So they must have done a consolidation, share consolidation. So instead of having 100 million shares on issue, they've got 10 million shares on issue or something like that. So they decided to commence trading or list on the NASDAQ. So they released an announcement yesterday on the 17th of August. Sezzle to commence trading on the NASDAQ, which in itself I found interesting. And then they updated the NASDAQ trading today. I thought maybe the share price would drop. So they're saying they have not started trading on the NASDAQ just yet. So NASDAQ halted trading in the common stock and advised Sezzle that there currently exists inadequate publicly available shares of common stock to make a market and facilitate proper trading of common stock on NASDAQ due to the large number of shares of common stock currently held by investors in the form of CDIs for trading on the ASX. Sezzle is working with NASDAQ to resolve the matter as soon as practicable to resume trading. I thought there might have been share price drop for Sezzle. There was not. There's a share price rise. Anyway, that's what I'm going to talk about Sezzle, because that was interesting. And the last company I want to talk about is Orexplore Technologies. Why do I want to talk about this company? Look at this daily chart. Up 117.4% on huge volume. When I say huge volume, so if we go to this company, we're going to look at the volume right now. Historical volume of this company. Shares traded, according to ComSec, 37.2 million. If we look at the trade history, yesterday there were 212,000 shares traded. The highest volume shares traded in the past week was 459 on the 14th of August. Now, if we go, this is a one-year history. They have a one-year history here. I want to look at the last time there was 1 million shares traded in one day. Possibly never. Well, not in the last year anyway. Yep, there we go. There we go. So on the 24th of August, they had 1 million shares traded when the share price was 8 cents. Share price now 10 cents. After a nice little rally in the share price. So huge volume. So something happened today with Orexplore. It's funny enough, if you look at that name of the company, there's two ways you could spell this or separate the first word. So O-R-E, then explore without the E, or O-R, or then the explore. So I wonder which way it is. Maybe we can tell by the announcement. It's just the one word, or explore. Okay, so before we have a look, just the title should get you excited. Orexplore signs commercial agreement with BHP. Well, straight away, you can see why the market has reacted. They just see the name BHP and think this is going to be great for Orexplore. But don't forget, when a small company like Orexplore, and I'm assuming it's small, market cap 5.2 million, when a small company like this signs an agreement with a massive company, it's going to be favorable to BHP no matter what. I think more than likely it's going to be highly favorable to BHP. I have seen this happen time and time again. When a small company has a deal, signs a deal with a major company, and it's not always good for that small company. There was a company called OBJ, and I'm thinking 2015, signed an agreement with Procter & Gamble, and the market got so excited. Wow, OBG has signed an agreement, a contract with Procter & Gamble. OBG virtually did not get 1 cent from that agreement. Maybe they got 1 or 2 cents, but I'm always wary about these commercial agreements. Now, in saying that, I don't know anything about Orexplore. I don't know anything about this commercial agreement. So let's have a look at this. Highlights circa 1.55 million agreement. for the deployment of Orexplore's mobile field scanning installation and technology platform to BHP's Carrapateena operation. Now, one argument, I'm not even sure what this company does. So Orexplore Technologies is a globally focused mineral technology business concentrated on advancing the commercialization of its technology platform across the mining value chain within, Okay, their technology platform consists of the GeoCore GX10 hardware product and Orexplore Insight user interface software. Doesn't say exactly what it does. Okay, Orexplore's first product is a transportable X-ray rock mass scanning technology that converts drill core samples into a three-dimensional data set to provide a through the rock image of external structures and textures, in addition to elements, detections, and density. Actually, does sound quite interesting. I'm going to put this down for more research. Now, again, $1.5 million agreement. Now, if their technology really benefits BHP, so this is a counter to my argument that more than likely this is going to be favorable to BHP. Now, there's a potential this is really favorable to BHP, this technology. And if it is, Orexplore could really benefit. And if, there's a big if this is really beneficial to BHP and they're only using this for one of their sites, there could be that opportunity to spread this technology to all of BHP sites. I don't know. So maybe this is why the market got excited. Under this agreement, valued at approximately $1.5 million, Orexplore will deliver site-based drill core and sample digitization services for BHP. So I'm wondering if there is potential that the value or the size of this agreement will significantly increase in the past. But again, you're just speculating if you are thinking that. So this is definitely just a speculative play if you did want to buy this for the long term. So interesting, just by what they do, small read of what they do. I should do some more research in this company. Anyhow, by far the best performer of the week was Orexplore. I'm thinking, I can't remember any other company share price rising by 117%. If we do look at the chart, so this is the daily chart. The funny thing is the share price is now at the level it was back in January this year. Not a lot of trading happening at all. This is the daily chart. So if we actually look at the trade history, yeah, it doesn't trade all the time. There is some large gaps in the trading here. So it was fairly illiquid. And I think the liquidity of this company is going to increase because of this. Because of the volume trade, a lot of volume coming in. Share price has been a downtrend. Whether this is the end of the downtrend remains to be seen. Hasn't been on the ASX for too long. Another reason probably why I haven't really looked at this company. Looks like it listed in January 2022 and share price has been dropping. There was a little bit of selling today. Share price got as high as 12 cents, closed at 10 cents. Why was it selling today? Well, look at if you go between 10 and 12 cents, and just go back in the past, there was quite a few shareholders who bought in that range between July 22 and January 23. Now, even above, say, 7.5 cents, there's going to be a fair bit of resistance, but it's pushed through that resistance zone quite well. The reason that's a resistance zone is because a lot of shareholders bought into that level, and those who bought a few weeks ago at 4 cents are loving this company. Anyway, that's all I have for this video today. If you have any questions, any thoughts about any company I have mentioned in today's video, if you think I ramble way too much, just let me know. Because I was hoping I could do this video in 20 minutes. And this point in time, looks like it's more like 40 or 50 minutes, which is ridiculous. Anyway, last thing I should say is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.